For our CEO Spotlight, I'd like to welcome in Lance Mitchell, the CEO of Reynolds Consumer Products, which made its IPO last week here on the NASDAQ, ticker symbol REYN, and it's the first over $1 billion IPO of 2020. What are we going to be saying in December about your year?
What a great year we've had as we've gone even further up from the opening point of 26. We're now trading at 30.
Yes, I saw that.
Nothing but up.
Okay.
I also want to point out that it may have been the first $1 billion IPO in this year, but it's the largest consumer products IPO in the last 20 years.
So there you go.
Yeah.
And I mean, we all know your products, right? When we talk about Reynolds Wrap aluminum foil, where you have 70% market share. I mean, parchment paper and hefty bags and sandwich bags. So when we talk about your year ahead, are you betting on people cooking at home, using the products? I mean, has the mentality gone back to the days before us?
Well, people have always been cooking at home, and it's not just cooking. It's it's food prep, but it's also serving, and it's also disposal. It's across all household convenience activities. And what we do is bring the gift of time to consumers, because our products are convenience products.
So people are budget conscious. They're cooking at home. You mentioned meal prep and doing things like that. How do you compete with DoorDash, Postmates, Uber Eats, and all that?
Because it is more cost effective. And actually, that's a growing in a small way, and particularly in some geographies. But across most of America, most people are still cooking at home because it's more cost effective.
Yeah. And what about, I mean, you've been the CEO for 10 years. So when we talk about what's going on at Costco and Target and Walmart,
great customers.
How your products are doing there?
Great customers.
And now
growing with
the
them.
digital part of this. So the digital may be tough in the competition space, where I say Uber Eats or something. But on the other side of the coin, these types of services like pickup, right? I order it and I just drive and pick it up at the curbside. Has that helped you?
Yes, it has. E-commerce has been something we've been focused on with a team that we put in place 5 years ago. And of course, Walmart and Costco and Sam's and our customers, as well as Amazon, all are really focused on .com as well as curbside pickup. And that's providing their growth, and we're growing with them.
So when we've heard about the coronavirus, right, and awful, obviously, what's going on here, and then that's part of it, coupled with how things have changed, right, since the tariffs. Materials, for example, this year are expected to see a drop for earnings and such, all kinds of things that have been factored in the last 6 to 12 months. How has the landscape changed for you, and what have you done differently to navigate through these sort of tumultuous times?
First, the coronavirus. We have 16 plants in the U.S. and 1 in Canada. All of our supply chain is virtually in North America. So we're well positioned to be able to be insulated from that. 99% of our revenue comes from North America.
Right.
Commodities, commodities were a headwind for us the last couple of years. We successfully navigated through those headwinds. We had to do it with pricing as well as some cost reduction initiatives, all within manufacturing and efficiency. But now those commodity costs have come back and stabilized, and it's providing us with some really strong tailwinds as we enter this year and go forward, and those commodities are expected to stabilize.
So what were some of the tougher parts of the commodities? Because, I mean, I guess you're basically saying, hey, we're somewhat recession-proof, and we can handle what's going on with the tariffs and higher or lower costs by adjusting our pricing a little bit. That is a nice sort of flexibility to have.
We've proven historically that we are very resilient to economic cycles.
Yeah, that's good. So what are some of the headwinds that you are, I know you sit there and you're preparing. I mean, the only way to succeed is to be prepared. So what are some of the things that you worry about that you are prepared for just in case?
Well, those commodities that we talked about are tailwinds. Those are aluminum and it's plastic, are the primary ones.
Right.
We have continually worked to ensure that we're offsetting other costs through an initiative we call Revolution, spelled with a Y for internal marketing purposes, like Reynolds.
Right.
But these are very specific cost reduction and growth initiatives that we put in place to ensure our continued growth of our bottom line.
So much goes on here in North America. I mean, we talked about your market share. You talked about how you're somewhat insulated. What about expanding? I mean, how do you do globally, or what are the global ideas? Do you think about that more?
Well, it's certainly an opportunity. It's not one that's in our near-term investment thesis. As we talked to investors on the roadshow, what we talked about was We're solid performing growth with demonstrated innovation. 21% of our revenue came from products that are less than 3 years old. So our story is about growing here organically with the winning formula that we've proven over the last 10 plus years.
So why now for the IPO? I mean, you've been in a position, we've had a great 10 years, right? You can't, right? I don't know, why now?
Because we're coming off a period of time where we've made some very strong investments in both manufacturing capacity as well as some new growth initiatives. And we were able to share those with investors. And as we were able to share those, they get to participate in that upward trajectory that we'll be seeing. And that was part of the whole reason that they wanted to join us on this IPO journey.
Talk about the balance sheet a little bit. The revenue growth, I think it dipped a little bit, but what is the idea here? What are the costs versus the revenue? I mean, one of the big concerns of the IPOs, and this is not you, but the path to profitability was such a big conversation last year for
You really
IPOs.
can't look at revenue as part of our overall growth initiatives. You got to look at volume, because as prices of commodities come down, we pass those on to consumers and retailers. So you may see lower revenue, but volume growing. And that's a big part of our overall investment thesis. Also, we are going to be 3.7 times levered from a debt standpoint, but we have very strong cash flow, $506 million in the last 12 months. So with that strong cash flow, we're going to pay down that debt and pay a dividend of 50% of net income.
I like that, and I heard it. The last thing I wanted to ask you about was about just what we're seeing with the environment and how the questions to CEOs on calls have changed, right? People want to know, what are you doing that's environmentally conscious? What are you doing for your employees that's better? I also am curious how you fend off the competition. I just would love a few last thoughts.
Well, on sustainability, that has been on our dashboard for years. We have developed an entire platform of products across all of our portfolio that are sustainable product choices for consumers. These include things like 100% recycled aluminum Reynolds wrap, wax paper bags for sandwich bags for those consumers that don't want to use a plastic bag, recycled plastic waste bags made out of post-consumer recycled plastics, post-consumer recycled plates and cups, and compostable plates and cups. So we've developed an entire range and portfolio of products.
But that costs more, right, eventually, or no?
As our infrastructure in the United States improves for recycling, those products, I think, will narrow significantly and will be able to be more cost effective.
All right, I'll admit it. I use Reynolds.
Excellent.
I do. That's my aluminum foil that I use when I...
Do you know that 95% of U.S. households have one of our products and 75% have 3 or more?
All right. Well, you have to go get those other ones. Congratulations on your IPO and continued success. Lance Mitchell, the CEO of Reynolds Consumer Products.